Hello there. This is Ben Yost with the Direct Lending Team, and I hope you're having a great day. What I wanted to go over with you real quick was the three things. That's right, the three things that they look at to get you pre-approved for a mortgage loan. The three things are credit, income, and down payment. That's right, credit, income, and down payment. That's what they look at to get you a mortgage loan. Those are the only three things they look at. And so basically, they just want you to have acceptable credit. They'd like to see you have some skin in the game with a down payment. And then they look at your income and is it something you can count on? And that's why they use 2 year averages and stuff like that. So really, that's all they're going to look at: your credit, income, down payment. The other thing they're going to look at is your debt to income. And your debt to income is simply, in other words, that's going to determine how much what you can afford. So as mortgage lenders, we don't care about balances. We go off of payments. Everything is a payment to us. So if you have a credit card, we don't care what your balance is. We care what the monthly payment you have to make is. Same with a car, same with a house. We go off what the payment's going to be. Okay, so to explain this a little better, what a debt to income is you have two ratios. You have a front and a back end. The back end, what they do is they take your proposed housing expense plus your monthly debts that are on your credit report, and they divide that against your gross income, and that gives you your back end ratio. Okay, they ideally want you to be 50% or below, which kind of makes sense. You don't really want your house payment more than 50% of your gross income anyhow. And you got to keep in mind you're really coming in on net. So that's actually pretty generous. They're letting you go up to about 50% on that. On the front end ratio, they don't want you to go basically over like 45, usually 43 to 45. And what that is that's just your proposed housing expense divided by your gross income. So you don't have to worry about liabilities on that. And so, usually what you see is something that's like around, 41, 46, something like that, as far as your ratios go. Okay, so that's what they look at. It's a little technical, but when you hear debt to income, that's what they're talking about. I get a lot of people, since I have you here, I get a lot of people who ask me, hey, I just want to know what I kind of qualify for without having to do an app. Okay, well, it's pretty simple math. Take your gross income, divide it by 12, and then divide that by 2. Okay, and that's about the amount you can go up to at a payment. Okay, then you can get on, and I have a calculator that I put online that you can use. You can get on a calculator and figure out, okay, I can go up to this much house real quick. Okay, so to give you an example, I made a note here. If you were made $75,000 a year, okay, that would be $6,250. Uh, that would be 6,000. That'd be over $6,000 a month. You divide that by 2, and that would be 3125. Okay, so you could go up to 3125 if you have no debt on a house payment. Pretty good, right? And that's just with 75,000. Okay, now if you have a car payment of say 400 and you had a credit card payment of 200, you would take 600 off of that, and then you could go up to 2525 as your payment. So again, take your gross income, divide by 12, divide that by 2, and that's the payment you could go up to, minus however much debt you have that shows up on your credit report each month. Okay, so that's the real down and dirty way that you can figure out how much you're going to qualify for. So again, getting a loan isn't as hard as everybody wants to make it look. It's credit, income, and down payment. If you've had some problems with one of those or two of those, I can help you out, because once we solve that, then again, we can help you get a loan. Okay, so anyways, if you have any questions, please give me a call. I hope you found this helpful, and I hope to see you in the Facebook group we're going to start pretty soon.